Good evening and welcome back to Be Rich. The Fed minutes are out. What are Fed minutes? Fed minutes are basically minutes of the meeting that took place before the decision was made. These Fed minutes are released 1 month after the event has passed. These revolve around the discussions that took place inside the Fed meeting, where several governors, several presidents of state units discuss with the governor on what they think is the economic outlook. The market initially thought this was a very dovish Fed chief who was willing to cut rates, in the sense not actually cut rates, at least cut the rate at which interest rates will grow. After two successive rates of 0.75 each, which was last done in 1981, when Paul Volcker was the chief of Fed. Nearly 42 years back, the markets have forced the hand of J. Paul and forced him to increase interest rates twice in a row at 0.75 and 0.75. Ever since then, people are waiting for the Fed minutes to come in to see whether there will be another rate raise of 0.5 or 0.75 in the coming rate cycle when the Fed meets. That is expected to take place in the month of September. But already you heard two rates of 0.75 each. And in the second time, it was expected that the Fed would increase a rate by 1%. But even as they raise rates, easy money seems to be available freely. And this is why even today there are a lot of offers from private equity players. The large wealthy people used to pledge their assets and buy and raise money at less than 1% a year, and then pass that money on into the finance market where the bubble is created. It is clear that most of the people, market participants, have lost touch with the actual economy. The actual economy is in great pain across the world, with job losses and not enough income to support families. This is true even in cases of Western Europe and America, where most of the poor got free aid, and bank managers took that free aid and created a product to loan against it. But today, after some time, the Federal Reserve is ready to tighten the monetary policy. This will significantly increase the cost of funds and reduce the liquidity overhang in the system. The Fed is nowhere near reaching its target. It was supposed to start with $10 billion and should have progressed up to $40 billion as I speak today. Which means the Fed as such must have cut its balance sheet size by $95 billion as of today. The Fed is nowhere near achieving this goal. This is primarily because the Fed believes that the economy is nearing recession and does not want to tighten too fast and push the economy into a recession. But it is inevitable that the economy will have to fall into a recession. In fact, J. Powell has said that he will increase interest rates to a point where there will be a restriction on business and business will suffer, and then he will hold the rates for some time to crush inflation. But what Jerome Powell is talking and what Jerome Powell is doing are two different things. He seems to be extremely nervous of the economy going down, and that is why the quantitative easing is not taking place at the rate at which the Fed proposed to do initially. This means the Fed is frightened that the market will tip into recession. There is no doubt all economies across the world are now going to tip into recession somewhere in 2023, and no amount of magic by the Fed and other central bankers can save the day. In fact, it would be better for the Federal Reserve to go whole hog and increase interest rates at a regular basis and push the economy into a recession, because this will mean the Fed has enough ammunition to cut interest rates. Like I have said several times, unless the real rate of return in America becomes positive, it is not good for the economy. I am surprised that the Fed considers 2.25 to 2.5 as a neutral rate, and as if the Fed has reached a point where from where it would, if it goes further, there may be a decline, but it is forced to increase because of inflation. The reality check is that inflation is at 8.5%. Even with 2.5%, the Fed has a negative return of nearly minus 6%. This means If the Fed takes off the gas of the pedal, then there is going to be enormous pressure. And this is what exactly happened in the last 4 weeks. Though Fed did not explicitly say it, it implicitly meant and sent signals to the market that the tightening phase is over and the Fed will pause and then start to cut rates sometime next year. Now, the Fed has been forced to bite a retreat and said they will continue to do whatever it takes to crush inflation. If they do not crush inflation, things will get from bad to worse and most Americans will struggle. As seen in the FMCG place, where in India the input prices, mainly bread flour and oil prices, have shot up, and this has meant that input costs have grown at a rate much higher than the output cost reflects. That is, if you raise the price beyond a point of this, then the small customer will stop buying this product and it will hurt you badly. Even if you are putting up a sale, it is very difficult to push products to the small and medium villages. This is why strategists in companies like Hindustan Unilever believe it is better to make the rich people pay more for premium products. Inflation is not only affecting the input side for manufacturers, even the output demand is shrinking as more people are trying to economize. Thank you for watching Be Rich. If you like this content, hit the subscribe button. Turn on the bell notification. If you do not turn on the bell notification, you will not be notified every time we put out a video. Once again, I thank you for watching Be Rich. Good evening and welcome back to Be Rich. I am visiting the historic town of Trichy on the 27th of August. We are planning to hold a meeting in Trichy where I get to meet my subscribers and people who follow me on social media. This will be a live interaction with my friends, followers and subscribers of my channel. It is very interesting. We have had several events in various small towns of Tamil Nadu. If you wish to participate in that event, a WhatsApp number is given below. You may contact us on that WhatsApp number or you could drop an email to the address given below. My team will respond to you. I hope to see you in Trichy on the 27th of August at 6 p.m. Thank you for supporting Be Rich. Good evening. It was decided to do an event in Dubai on the 23rd of September. It was a Friday. By popular demand, we have shifted this event to 24th September, the Saturday, so that it would be convenient for you people to attend. So I'll be in Dubai on the 24th of September at 6 p.m. Hope to see you in Dubai. Those desirous of participating in the Dubai event can contact us at the WhatsApp number given below or mail to the email ID given below. We will see you in Dubai. Kindly drop us an email or send a message on the WhatsApp number.